The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
We're going to talk about a couple of more value stocks here with our value stock strategist, Tracey Ryniec, who's uncovered, well, at least one kind of unique one. And at first I thought maybe you were trying to get the jump on Halloween with this company name until I read what they did. Skullcandy is the name of the company. They make headphones.
Yeah, they do. They are like the, earbuds and the headphones that you see people just wearing as they walk down the street.
Fashion stuff.
Yeah, this is a very hot market right now. And this company kind of focuses on the relatively cheaper versions of the headphones, and that's been a real good niche market for them. They also have a lot of good sports performance type of earphones, which is also another good niche, and they've been focusing on women, different earbuds and stuff for women's ears. And so all these things are adding up to some good news for them. They are sold nationally in the big retail chains like Walmart and Best Buy. They were in Radio Shack. That is one of the only negatives on this company, is that since Radio Shack went bankrupt, they did lose a sizable share of their sales through Radio Shack, but they're making it up in these other areas. And they've just recently added at Walmart like testing
listening stations
and stuff. So that's been helping sales through Walmart, because then you can try out the product.
Right.
Like I said, this area is really hot. This is actually a rare stock that is a value plus a high growth company. You can see the estimates are rising here. The analysts definitely like what they heard last quarter. They saw growth of 8% on sales. Margins were a little iffy, so we had a little bit of sell-off in the shares because people were a little concerned about margins, but they're supposed to see over 50% earnings growth this year and another 30% next year as, again, this market really takes off. They're launching this new sports wireless earbud later this year, right in time for the holiday season, so that should really help them. But you can see the chart, and I looked at this and I was kind of shocked.
Yeah.
I mean, shares have gone from almost $12, under $6. They're at new 52-week lows. That one big first drop back in April was based on some issues that people thought they might be having with margins. But the rest of the sell-off more recently is just, overall with what's going on in the market and kind of a panic. But we just got consumer confidence numbers in today, and they're at 8-year highs. So, if you're going to buy anything, you might buy the under $100 headphones. So I see this as a really big buying opportunity in these shares, trading a little bit under 15 times, but so it's not super cheap as far as a PE, but you're getting still a value plus with this just tremendous growth. So this is kind of a rare combination.
Yeah, and today is September the 29th.
Right.
So there is value and growth here despite that chart, huh?
Well, yeah, you look at this and you get a little scared, like what's happening, but this is an opportunity. So if you're looking for a consumer-based company, something that's kind of on the cutting edge, everybody uses their product, or like younger people do for sure.
Sure.
And it's in this good price point, then this is where you want to be.
All right, the other stock that you want to talk about is Aetna.
Yes.
They were in the news lately because they want to buy Humana.
Right. They're trying to push through this really huge $30 billion merger. It's going through congressional hearings, and it will be, vetted by Justice Department for monopolistic, anti-competitive reasons. But the analysts all believe that this merger will go through. The thing that they like about it is that it will give them a bigger Medicare Advantage market, and that is very lucrative for these managed care companies right now. So, they bought Coventry a couple years ago. That was about a $7 billion deal, and they were able to integrate very well with Coventry. So the analysts believe that will be the case here again with Aetna. You can see the estimates all rising. These, areas strong, the managed care plus factoring in Humana, that'll give them a boost as well. So that all looks good. About 12% earnings growth this year, almost 10% next year. It's not so bad for an insurance company.
Right.
And then you can see this chart. I mean, it's just been tremendous. This is the 1 year. It just keeps going up. as more people go into Obamacare, they're going to need insurance. These are all also a driving factor for these managed care companies. But you can see this also has had like a pretty major sell-off in the last, even just 1 week since, it's down about 11%. And so this is also a buying opportunity if you're looking for these managed care companies. It's trading just under 15 times as well. So again, not like super cheap, but with everything that's going on with it and this good market for insurance right now, this isn't a bad thing to want to be in either.
So you think the takeover of Humana would be good for Aetna shareholders?
Yeah, and I do think that will probably go through, and it will create this, huge, massive managed care company.
Right.
But they will get a lot of, there's some overlap and things. They'll be able to cut costs there.
Sure.
And then they will be able to take advantage of this big Medicare Advantage market.
All right, do you own either of these?
I do not.
All right, check out more stocks and stock picking strategies and other stock information on our website, Zacks.com. You can link to it all off the homepage. And don't forget, if you're watching our videos on the YouTube platform, there you can subscribe to them and even comment on them. Feedback's always welcome. With Tracey, I'm Terry Ruffalo.